Brad Williams, Frugal Finance. Let's talk about insider trading. In short, you're not that smart. You're not that smart. You're not going to get away with it. FYI, I used to be a stockbroker long ago. And when I was in New York going through training, they took us to the office or the area where the SEC had their computer system. And it was enormous. This was 35 plus years ago. Their sole function was to focus on insider trading way back then. Today, I can't imagine the technology and the sophistication they have in terms of tracking and correlating individuals with trades. The SEC reports actions. The SEC is very aggressive. FINRA is very aggressive in terms of insider trading, and they have reports, and I'm not going to get into that. But this particular topic is 5 surprising facts about insider trading. In the Showtime television series Billions, the ambitious attorney, played by Paul Giamatti, is certain that a fictional hedge fund manager, Bobby Axelrod, played by actor Damian Lewis, is guilty of insider trading. What have I done wrong? Really? Except make money, succeed, Axelrod says in his defense in an episode. There isn't a clear hero and a villain in the television drama, which began airing in its second season way back in 2017. In reality, there are many agencies and regulators, including FINRA, the Financial Industry Regulator Authority, and the SEC, Securities Exchange Commission, working behind the scenes every day to catch insider trading and to bring them to justice using established legal precedents. Here are some real-life facts you may not know about insider trading. Illegal versus legal insider trading. While most people hear about illegal insider trading, though, through fictional drama and real headlines, the term insider trading includes both legal and illegal conduct, according to the SEC website. The legal version occurs when corporate insiders, including officers and employees, buy and sell stock in their companies without processing material, non-public information at the time of their trades. These trades must be reported to the SEC and can be looked up by an investor using the regulator's EDGAR database. Illegal insider trading refers generally to buying or selling a security in breach of fiduciary duty or other relationship of trust and confidence while in possession of material, non-public information about the security, according to the SEC. For example, it is legal for a CEO to buy shares in her company generally, but it would be illegal for her to do so if, say, she knew it would be announced the next day that the company was being acquired. Now, there are some really, really interesting stories. And if you check in at Bloomberg, there is a columnist. His name's Dennis Levine, and he has a daily newsletter. Really sharp guy. His newsletter just goes through, and it's great writing. His background, he was a Goldman Sachs genius, also a trader. He went on his own because writing is his thing, and he takes sophisticated legal stuff and he puts it in layman's terms, and he is always looking at these insider trading transactions. He'll take a very sophisticated case and put it in terms that you and I can understand. So check it out. He's got a newsletter. You can sign up for it. The many parties, from investigating to prosecution. While the U.S. Department of Justice and regional U.S. attorneys' offices carry out criminal prosecution of individuals who violate the federal securities law, potential insider trading is often initially uncovered by FINRA. FINRA is responsible for overseeing and examining the more than 635,000 brokers and more than 3,900 securities firms doing business in the U.S. In addition, FINRA, Office of Fraud and Detection and Market Intelligence. This is the office or the department we checked out, is also responsible for conducting frontline insider trading surveillance for the U.S. market. FINRA's OFDMI uses a highly sophisticated proprietary market surveillance system called Sonar to track unusual price or volume movements in stocks across the U.S. and to combine that information with news feeds that Sonar receives on a daily basis. That process produces alerts which identify trade scenarios that many indicate potential insider trading and that warrant further investigation. FINRA is a key SEC partner in the detection of insider trading violations. Back in 1997, OFDMI referred 435 matters regarding potential insider trading. Well, let's check it out. Let's see what it says here. I'm not seeing anything from monthly disciplinary actions online. This is probably against the brokers. It's probably not. Well, you can check it out on your own. Search for disciplinary. Yeah, this is the stuff where a broker is churning or what have you. But you can check out all this stuff out. It's helpful. The origins of prohibiting insider trading, this goes way back. Insider trading is a crime through judicial interpretation of the SEC Act, blah, blah, blah. And this just goes on and on and on because there was a lot of material, non-public information way back when that you and I, as the average consumer, would never get the scoop. Well, trust me, it goes on day in and day out. It's not so much direct insider trading. I call it nudge information. You're an analyst for one of the large investment firms. Your job is to get as much information about a company as possible. So you're talking to a CFO. You're talking to a CEO. Well, they can't give you specific earnings information or good news or bad news, but there's a fine line. There's a fine line there. So it's a matter of you having access to that information first. Well, analysts get that information first, and then they can make assumptions based on how that information is delivered. Now, it can't be direct, but it could be suggestions. It could be hypotheticals. It could be any number of means. That's why the pros have an advantage over us, because they wine and dine these folks. They show up at the golf courses. They show up at all of the highfalutin presentations and seminars and what have you. So they're always rubbing elbows. There's no way you can put a Chinese wall between the two parties. So it happens, but it's not direct insider trading. It's just the professional side of the finance industry. The evolution of interpretation, how this is pieced together, it really is, common sense comes into play here. If you're on Reddit or if you're using some type of communication with your buddy and you guys are using code, well, that information, even though it's supposed to only last for 5 seconds, it still leaves a trail. And the SEC and FINRA will look at that communication, and if you're trading chickens, which means you're buying XYZ company, and then you're breaking eggs or something like that, some code, or you're shorting, some ridiculous tone, well, the SEC and FINRA will get that information, and guess what? You're going to jail. The courts have played a major role in defining the laws that regulate inside trading. At times, the SEC has adopted administrative rules to resolve, okay, you can read this stuff on your own. 61, a broker was accused of trading while in possession of non-public information he received from a company director. As part of the SEC's administration and opinion on that case, the agency adopted the disclose or abstain rule. Insider and temporary insiders who possess material non-public information must disclose it before trading. Okay. And then on and on and on and on. Individuals face up to 20 years in prison for an insider trading violation, according to the SEC website. The maximum criminal fine for individuals is $5 million and is $25 million for business. That number should go up substantially. However, the total penalty may be far higher since those found guilty of insider trading are also subject to penalties for related charges and civil sanctions. In one high-profile insider trading conviction, hedge fund manager Raj here of Galleon was sentenced to 11 years in prison in 2011 in order to pay $156 million in penalties and fines for forfeiture of illicit gains. Well, you probably can go to Wall Street Journal on a daily basis and you're going to read something about insider trading. Here's a clue. Here's a tip. You're not that smart. You may get away with it once or twice, but we get into a habit, and that habit is greed. And greed in television series is good. But if you're insider trading, knock yourself out, but don't be surprised if the FBI, FINRA, SEC, the Justice Department come knocking at your door. Comment. Let me know. Brad Williams, Frugal Finance. Hope that helped. Just an FYI. These are kind of fun little topics that you as an investor need to be aware of. Thanks for watching. See you soon.